investors. How has the market reacted as talk of mainstream institutional investment echoes in the space? Denis O'Neill, O'Neill Capital Advisors.
Hello, my name is Denis O'Neill. I'm the CEO of O'Neill Capital Advisors, and I'm the newly appointed CIO of Digimax Global, which is a publicly traded investment bank that focuses on later stage STO funding. So the topic for today is institutional investing into the cryptocurrency market. To give you a little bit of my background is 25 years of investment banking. I started two of the largest regional investment banks in Chicago, and I ran the SoftBank E2 Capital office in Chicago. So I've raised a couple of $1 billion in early stage capital. I've taken 70 companies public, and now I'm considered to be a thought leader in the cryptocurrency blockchain space. I've spoken at over 25 conferences globally. Just spent 2.5 months in Asia. So I think I've got a good feel for this market. I come bearing good and bad news. The good news is that the institutions have taken over. And the bad news is the institutions have taken over. 90% of all the cryptocurrency trading that's happening in the markets today are institutional. I just got back from, I just attended the trading show in Chicago, where all the largest institutional investors were there, and all their trading desks were there. And their biggest issue with cryptocurrency was that there wasn't enough volume, that it was scattered amongst too many exchanges, that they needed more volume to justify their activities. So I think it's best to start here with how we got to where we're at today. I mean, obviously, we all know that we had the ICO boom, we had the ICO bust, and the major issues with ICOs were they were pretty much unregulated, no accountability, no transparency, very little due diligence, management teams not with a track record of success, and mostly companies that were conceptual at best, and a lot of scams. And now we have, the market is evolving, it's maturing, and now we've moved into a new market, which is security token offerings, which for institutional investors, it looks, feels, smells, tastes like a traditional investment. You have, I mean, obviously you have a lot of the attributes that would come with a traditional security investment of private equity or even public markets. Obviously, I mean, you own a piece of the company, percentage of the profits, percentage of the revenues, but also you get transparency, accountability. You get, you're fully regulated, so you don't have the regulatory risks to where that ICOs have. And then you have a digital ledger, which is immutable, which we all know that they can't cook the books. So when you're looking at I would say institutional investing into this market. When I say institutional investing, I'm talking about family offices, I'm talking about private equity funds, venture capital funds, money managers, fund managers, anybody that manages anywhere from $50 million and above. They all look for the same things. I mean, they look for, first, when you're looking at a company, they look at the management team. They always bet on the jockey. They never bet on the horse. And they want a management team that has a track record of success, that has expertise into the specific market that you're into, and they want to have at least somebody on the team that has historically scaled a business, so that they don't have that execution risk which has been pretty bad in the ICO world. Also, that they want to make sure that the markets that you're going to participate in are vibrant markets, that they're really, really big, and I mean, they're big markets to where that if you were solving a major issue or a problem within that market, or a pain point is what we'd like to call it, that if you do that the returns will be exponential. So at the end of the day, I think that, I mean, the early stage seed rounds, A rounds, I don't see a lot of the traditional institutional investors participating in that. I see some of them actually incubating their own deals, but they are pretty much, they want to see that you actually have raised some capital yourself, you've deployed some capital yourself. They'd like to see how you've actually deployed that capital. And they'd like to see the results of that, of that deployment. And then they want to see that how it's actually scaling into the market. So I think the biggest issue that we have today is that a lot of the traditional private equity or institutional investors, they're not that comfortable with STOs. So what they would prefer to do is have a private equity investment into a company with the right to convert into an STO within a given period of time, maybe a year or 2 years. That is what's actually getting a lot of traction in the market today. And when you look at the STO market, there's been 100 transactions that I know of done today. 60 of them have been done in the United States, and they've been done under Reg D offerings. So although that other markets have evolved, like Malta, that have put out regulations and laws and giving guidance to be able to do cryptocurrencies and things of that sort, that in the United States right now, Reg D offerings, which are private placements, that they're buying private shares into a private company, and what they're claiming that they're doing is that now that they're listing those shares onto exchanges that trade private shares. So we haven't seen the subpoenas that, 90% of the ICOs that happen in the United States got subpoenaed. So unfortunately, the issue with that is that once you get a subpoena, you're no longer in business. 90% of your time and money goes into defending a subpoena, not being in business. So what I'm seeing in the market today, the major issues that we have is that everything's going to STOs. ICOs are utility tokens. That means it's for utilization, not speculation, but utilization. And if you have a real case for utilization, then you're an ICO. If you don't have a real case for utilization and it's really speculation, you're a security. So when you talk about security token offerings, now you're talking about a market that I think is at the beginning of a hockey stick, but we've just got maybe a couple of dozen exchanges that have been, approved for regulation. But we also have very few companies that are actually listed on these exchanges, and the volume is very, very, very minimal. So we're at a stage to where that we're at the beginning of the beginning of the beginning of the beginning, because I think that institutionally, that this is what the market's looking for. The institutions have taken over. We went from 90% retail, 10% institutions, and the institutions that did ICOs were mostly flippers. And now we're going 90% institutional investors, so now it's have to look, feel, smell, taste like a traditional investment. And that's where the money is being attracted. That's where there's only 10% of the institutions that are active in any way, shape, or form in the crypto market today. And it's a very small percentage of the capital that they're under management. So I think that as these markets evolve, as they mature, as these STOs and STO exchanges get real traction in the market, that we're going to see a tsunami of investment coming into this market. And it's not going to happen in retail. Retail will be the followers. Institutional investing will be the leaders. And then at some point in time, within the next 2 to 3 years, we're going to see a major consolidation within this industry. The major players will buy all the major exchanges and get them under one tent. And I got 9 seconds left. That's pretty much it. Thank you for listening.